We need to have a very serious conversation about what's happening in the economy right now. And the reason we need to have that conversation is that when people go out to vote in November, they should know what are the parameters around which I'm thinking about who to vote for. Have I been sufficiently taken seriously by my elected officials such that we have seen improvements in a bunch of different economic areas, or have things gotten worse? Has Donald Trump's promises come to become reality, or have they been ignored? And are the Republicans in the House and Senate simply enabling him and allowing him to do it? Well, let's take a look at a bunch of different indicators. Tell me if this is useful. There was a very good piece by finance guy Stephen Ratner in the New York Times, and he looked at 11 different elements of the economy and used them to assess how things are going. Let's take a look. When you look at economic growth, we see that GDP is pretty crappy in 2025 and 2026, especially 2026 so far. Now, Donald Trump's promises and the promises of his economic advisors were we're going to see 4% growth, 5%, we could even see 6% growth. And we haven't seen it. We have seen positive but low GDP growth numbers. Well, that's not so good. Donald Trump has made numerous promises that we are going to stop running a deficit and it will eventually allow us to pay off the national debt. In fact, Donald Trump during his first term said the national debt will be gone by the time I leave. And what we actually see when we look at the data is a widening of the deficit. And as you can see here, as Donald Trump has come into power, the deficits are already getting worse. And you see on screen the projected longer term impact of those deficits, of that budgeting, and it is only going to get worse. And as a result, we go on to our next example. If the deficit's getting bigger, then we know that the debt will grow, but will it grow as a percentage of GDP? And the answer is yes, it will. You see that the projections based on Donald Trump's spending are that federal debt as a share of GDP will go up all the way up to levels beyond those seen after World War II, during and after World War II. Well, what about manufacturing jobs? Because that was another big selling point. We are going to bring back patriotic manufacturing to the United States. Factories and plants and jobs will come roaring back. But look at the data. Manufacturing employment is down since Donald Trump came back to office. It's at roughly 12.6 million jobs right now. And that is well below the manufacturing employment of the Biden era. Importantly, and I know many of you know this because I've mentioned it, there are about 500,000 open manufacturing jobs right now. They're available to people who want them. At the price being offered with the locations and responsibilities of those jobs, 500,000 of them are just sitting open. People don't want them. Well, what about tariff revenue? At least the country took in a lot of tariff money, right? Well, let's talk about that a little bit. First, American companies pay the tariffs. So we've got to ground this in the reality that while Trump says we're taking in billions from China, China's not paying the tariffs. The United States importers pay the tariffs, and about 85% of those tariff costs are passed on to you and to me through higher prices. Trump said we are still putting a lot of that money into the Treasury. The money is coming in. Fine, it's coming from American companies, but at least it's coming in. But what we are seeing right now is that the windfall isn't happening. And what this chart shows is net customs revenue. And net customs revenue is plunging because the effect of the tariffs is simply stopping a lot of these imports, and it is not being replaced in a wholesale way by American manufacturing. It's just not happening. Okay, well, inflation may be up, but at least wages are exceeding inflation, right? Wage growth is higher, so people's purchasing power is going up. Wrong. Donald Trump's promise was we will end inflation and make things more affordable. But what we are now seeing is that prices are up more than wages year over year based on the last month. And when inflation goes up more than wages, you lose purchasing power. The promise was you will be able to buy more because affordability relative to wages, it's going to be better. You will be able to get more stuff. And it turns out that people are able to afford less stuff. And I don't mean, cheap tchotchkes. I mean housing, I mean healthcare, I mean groceries. It's becoming less affordable. We go to gas prices, where the promises were very, very big. Trump promised gasoline below $2 a gallon, but the national average is above $4 a gallon still. And the Iran war is a big part of this. Regardless, the promise was gas prices would be way down. And instead, gas prices are up significantly since Donald Trump became president. What about housing? Donald Trump said housing is going to become more affordable. Home ownership will be more affordable. Except then when he got into office and housing didn't get more affordable, he goes, well, you don't necessarily want housing prices to go down because think of all the people who already own houses. Their assets will be worth less. Needless to say, there's really been no improvement. The median home price has remained basically the same from the level that Trump inherited, not increasing housing affordability. And meanwhile, when we go to mortgage rates, Trump said, when we bring inflation down, mortgage rates will come down. So even if home prices stay the same, it'll be more affordable to buy a house because the rates of mortgages will be lower. Not really going on. 6.7% as of right now for a 30-year fixed rate mortgage, historically elevated, and a number that does not make housing more affordable for the average person. We then have Medicaid. Trump promised, no, we're not going to cut Medicaid benefits, but we have CBO projections which show really big reductions to Medicaid if the current plans are allowed to remain in office. Hopefully this is something the next president will change. But as you can see, $17 billion being cut from Medicaid this year. It would be $47 billion next year. It would be $63 billion the year after that. This will result to benefit cuts. And remember, the promise was not one penny, not one penny. And what they're trying to now figure out how to say is they go, well, we're cutting, but we're cutting the waste. Benefits won't go down. But we've already seen the analyses. Benefits will go down. And what about people not on Medicaid, fortunate enough to either have an insurer sponsor plan or buy your own plan or whatever? Well, health insurance premiums, which Donald Trump promised would come down, have actually jumped significantly up to $625 a month in 2026. A big part of this was those enhanced tax credits expired. And what that left consumers with are significantly higher premium costs for health insurance. So think about the totality of this. And if you are going to call me or when I do a live stream, or you're going to write in or leave a comment going, David, the economy is better under Trump, I want you to tell me which metrics you're looking at, because there's even more that I have. Here we looked at health insurance premiums, Medicaid, mortgage rates, home prices, gas costs, wages relative to inflation, customs revenue related to the tariffs, manufacturing employment, debt, deficit, GDP. It all looks terrible for Donald Trump. If you're going to argue that something looks good, tell me which metrics those are. I could have included in this that car loan delinquencies are rising and are at really high levels, which is a leading indicator that it's getting very tight for households. I could give you 10 more of these metrics. If your argument is things are good and you're going to reward Republicans by voting for them in November, tell me which economic metrics look good. And if you're going to come to me and go, well, the stock market's good. Yeah, the stock market's good. I'm happy about that myself, as someone who has a significant portion of my net worth in equities and to a lesser degree in bonds. I'm happy about it. But we know that stock market increases and decreases disproportionately affect the wealthiest people who own the lion's share of shares of stock. So that's not really the win that some people believe it to be. So let me know which elements of this economy are looking good. Thanks for watching. Check out this other video. And if you like our content, make sure to subscribe so YouTube puts our videos in your feed, and subscribe to the podcast on Spotify and Apple.